Hey friends, today I will compare Roth IRA with an IUL as a financial strategy. I also added a taxable account here for just illustration purposes because we know there are better options out there. But the first thing that you see, I made this illustration with 5.5% interest rate, and I'll explain later why I did this way. So I have a 21-year-old client. The contribution was set for $400 per month because Roth IRA only allows $6,000 a year, which gives the IUL a head start in a competition here because there is no limit contribution in an IUL account. But what many financial advisors are against IUL, it's because they see these numbers over here. Right off the bat, they say that IUL is not a good strategy because 1/3 of the contribution goes to the life insurance. And they even say that a 21-year-old is healthy and does not need a life insurance right now. Well, this is true. However, if this client happens to have a car accident and ended up in coma, paralysis, severe burns, brain injury, major organ transplants, or difficulty to go take a shower by herself, dressing, eating, walking, going to the bathroom, she can claim her living benefits that in this illustration it starts at $307,075. This amount isn't available for the Roth IRA. If something happens to her, that's the amount that she has. Let's say, year one, it's the $5,486. So you kind of lose the money in the beginning, but you have this amount here ready for you if you need it. It's not only for not only this is not only for critical and chronic illness such as cancer, stroke, heart attack, Alzheimer's, but also critical injuries. So total, that are 21 triggers that she can claim as her living benefits. And there is no waiting period. And this money is available not only to pay for medical debt, but also to pay off a house, a credit card debt, or a student loan, pay for the groceries, or even traveling. So in other words, no GoFundMe or asking money for her parents, okay? As the years go by, you will see that IUL, it's starting to catch up. So let's say by the age of 35, she decides to buy a couple of apartments to turn into Airbnb and needed $50,000 down for payment, or she needs money for a startup business, whatever. It doesn't matter the reason why she needs the money. On a Roth IRA account, her only option is to withdraw the money and pay the early withdrawal fee of 10% because she is on the waiting period. And to waive this fee, she needs to wait until she's 59 and a half years old. On an IUL account, she has two options. Option number one, she can withdraw the 50,000 without paying a fee, because this amount, 50,000, is less the amount that she has invested. So right there is a great way to use the IUL account. Option number two, that it's even better depending on the situation, she can borrow from himself and pay back with a 4.6 fixed interest rate. The good news is the account will continue earning the compound interest as it had the full amount. So if she pulled 50, in theory, she just have 47,000, a little bit more left, but the account will continue generating the interest rate as she had the 97. The thing is, at this point, she might even be earning 6, 7, or even 9% interest rate and making profit, even though that she's paying the 4.6 back to the insurance company. She might be making more and making even a profit. So that's the power of IUL that you do not have in another accounts. You grow your own money so you can borrow from yourself instead of the bank. Right, so let's continue with the contributions. I'm gonna just delete everything so you guys can see. By the age of 56, her as I said before, the life insurance will increase every year. By the age of 58 years old, her life insurance policy, it's up to over $1 million. That's when she needed the most. Unfortunately, as we get older, chances are for us to get sick, it's higher. So but this when everything gets very, very interesting. By the age of 65, on Roth IRA, she accumulated $936,830. On the taxable account, it was a little bit over $500,000. So that's why pay attention for your 401k or your IRA. Educate yourself with the accounts that you have, because you might be paying here the calculation I did 25%. But educate yourself if you have a 401k and when you can withdraw without paying taxes, because as you can see, at the end, if you have to pay taxes, you're going to hurt yourself. Okay, so learn a little bit more about all your taxable accounts. On IUL, she made even a little more. She hit over $1 million, and she still have the life insurance with the living benefits. So she has, even though she missed a little bit in the beginning, at the end, it was worth it, right? But this is not all. Actually, that's when it really gets interesting, that the financial advisors don't tell their clients. So by this point, she worked 44 years old, 44 years, right? And now she wants to have a retirement, and she decided to stop working. So with this calculation here, the IUL can provide 71,500 and where is it? 71,561 dollars every year that she can use. She can choose yearly or divided by monthly. So we're going to start with deducting the 71,000 every year for all these accounts. Now here's my question to you: how many years do you think that this taxable account will last? I wanted to answer that, and I'm gonna give you the answer, and it is about 7 years. You worked 44 years to have 7 years of retirement, and that's why we see lots of, especially we're talking about 50 years ago, and that's why we see grandmas and grandpas working at Walmart, because they didn't have the option of an IUL back then, but now we do. And that's why we see them there still working, because they cannot make a living with just the amount that they accumulated. Roth IRA, how many years do you think it would last? Roughly 12 years. Again, you worked 44 years to have 12 years. It does not make sense. The good thing for the IUL, you will receive the 71,561 for the rest of your life. The company will have available roughly $4 million for you. Of course, we're not going to live 120 years, and that's one of the reasons that we don't want to overpromise what we can deliver. But that's the amount available for you. Okay, now let me explain why I chose the 5.5% interest rate. Our calculations is based the calculations that we do here for the IUL. We try to be more conservative, and so we made a 5.5. So to compare apples to apples, I put everything that it's making 5.5 interest rate. But we are a 175-year-old company that has the history to prove that, in fact, we pay our customers, the average is 5 to 8% of interest rate. So the chances are this number here is going to be even higher. We just, again, we don't want to overpromise what we can deliver. So that's why we make all the calculations at 5.5. But the thing is, our floor is 0. So if the market goes down, we don't lose money. Versus Roth IRA, you're gonna lose your money, and then when the market goes up again, and then you need that recovery period, and then make a profit. With IUL, we don't have the recovery period because the floor is 0. If the market goes up 1 or 2%, we're already making profit. So that's why chances are we're going to make more money than what I'm showing here. And our cap today is 9.25. So it's really good. So if you like this content, please share with your friends. And if you want me to run an illustration for you, just schedule a meeting with me, and all this information that I'm showing here, it's completely free.